Okay, Bismillahirrahmanirrahim. Assalamualaikum and salam sejahtera. Okay, so I hope that you all are fine, yeah, in a good condition. Stay safe and stay healthy. Okay, so today, I will focusing on chapter 6 macroeconomic, yeah, which is money and banking. Even though, yeah, in this slide, as you can see, yeah, it's a chapter 15, but that one is from original textbook. Yeah, that consists of micro and macroeconomic. Yeah, so since the chapter 15 in the textbook is more on macroeconomic syllabus. Yeah, so one of them is on our chapter 6, which is money and banking. So let's have a look at money and banking. Yeah, what is that is all about? Okay, what is the definition of money? Okay, so as you can see here, okay, right, the term money is something that people generally accept as a payment. You see, the keyword here is payment. So therefore, yeah, usually money is used to pay something. Yeah, all right. Specifically for goods and also services. And sometimes, yeah, money can be used to pay off debt as well. Yeah, because sometimes you have loan with banks or loan with friends. Yeah. So you need some money to pay back, yeah, whatever that you owe them. Yeah. So money is also defined as anything that acts as a medium of exchange. All right. Before centuries ago, yeah, they don't have money systems, but they have one initiative that called as barter exchange, whereby they trade goods with another one. Yeah, for example, yeah, one seller trade clothes with cow, for example. Yeah, so that is a barter system. They trade goods with goods. But for nowadays, yeah, money is a use of medium of exchange. That means the money, in order for you to get some goods or services, you need to pay as their exchange. Yeah. So let's have a look at functions of money. All right. Definitely, yeah, based on the definition, yeah, medium of exchange, yeah, whereby is a platform, yeah, for you to pay for any goods and services. And then money also can be measured of value or unit of account. It can be in currency. Yeah, for example, Malaysia currency is RM or US dollar. Yeah, in US, or sometimes it can goes by cents as well. So money can be measurable. Yeah, because they are more on value based. So as far as value is concerned, this is the one. Yeah, one of the function of money is store of value. Yeah, money can be saved. Yeah, money can be saved and money can be stored. Yeah, anywhere. Yeah, either in your pockets, yeah, either in your wallets, either in your bank accounts, and so on. And then the last one, standard of deferred payment. That means, yeah, for the later payment, especially for pay of debts, yeah, definitely, yeah, the borrower, yeah, the lender, yeah, wants you to pay back whatever that you borrow from them, yeah, them especially money. So therefore, yeah, in the later payment, definitely you need to use money to pay back all the loans, yeah, all the debts. Okay, qualities of money. Why money is so we call it as is the highest quality, yeah, among all the asset, yeah, okay, in the accounting world right now. Okay, so but people say that money is king. Yeah, money is king. So therefore, what are the qualities that money can deliver for the perception of people? The first one is acceptability. Yes, money is acceptable worldwide. Okay, none of you ensure that money is not important, but money is very, very, very important. Yeah, which is acceptability. Okay, the second one, durability. That means money can be used for the long time. Yeah, as long as you live. Yeah, for not only next 10 years, next 20 years, next 50 years, yeah, next 100 years. Okay, money can be used anytime. Yeah. All right, divisibility means that money can be divided. Well, we're talking about diversify. Yeah, divisibility, that means diversify into spending, into investing, yeah, into budgeting. Yeah, so with money you can do anything. And then stability, that means the value, yeah, that money has deliver the stability. That means in terms of your income, when we're talking about national economic, we're talking about stability of money currency. Yeah. All right. Relative scarcity. Yeah, definitely. Yeah. Money can be what we call as scarce. Scarce means that at one time, yeah, you feel that there will be no money. Yeah. Okay. And then you need to get some money, and then you spend, and then the money will be finished. So always, yeah, people might say that, oh, not enough money to pay something, or not enough money. We're talking about scarcity. Always have some weaknesses, some lackluster. Yeah, we're talking about the resources that people have. Yeah, money resources. And the last one, portability. That means money can be transferred somewhere. Yeah, transfer to people, transfer to bank account. Yeah, which is portability. Okay, there are some types of money, but sometimes you associated with paper money and coins money, but it is beyond than that. Okay, the first one is fiat money. Yeah, fiat money that consists of coins and paper money. Okay, the shillings and then the paper money, and then token money. Okay, token money is sometimes can be exchanged by money. Let's say the token of let's say if you play games, yeah, play arcade games, and then you want to exchange your money with the token, yeah, that means the token. So you can use token to pay for some entertainment. That is an example of token money. And also in the Shopee, yeah, some for Lazada, sometimes they have a token money as well. Yeah, because you purchase something and then they give you some token of appreciation, and then you can use that as an extra money for the future spending. Okay, commodity money. Commodity money, that means the value of money in terms of goods. Yeah, I give an example. Gold. Okay, gold is one of the commodity whereby it is valued by money. Yeah, and then if you learn more on derivatives, yeah, during principle of investment, we're talking about the palm oil price, yeah, and then share price, and also foreign exchange. So these are the commodities. That means the value is derived from goods. Yeah. Okay, and then legal tender. Legal tender is we're talking about contractual money agreement. Yeah. Okay. For example, if the company have a project awarded tender by the government, and then the contract itself, yeah, is have a value of money. And the last one, demand deposit. That means money is deposited into bank account. Yeah, either savings account or current account or fixed deposit and so on. Okay, so we have demand and supply of money. As always, yeah, we learn during micro and macro terms. Yeah. Okay, demand for money, it is usually for consumer. Okay, consumer or society. Okay, those who are people who really wants money. Yeah. Okay, so there are some three motives of why they need money. Yeah. And then for supply of money, that means producer who produce money. We talking about central bank. Okay, anywhere around the world, central bank is usually supply the money. If you see the paper money that in your hand, you will find out that is the name of central bank. For example, Malaysia, with the paper money is issued by Bank Negara Malaysia. Or if you have American notes, yeah, that means it is issued by Central Bank of America. Okay, we're talking about supply of money first. Yeah, it is controlled by central bank. That means they are the only parties, authorities that allows, yeah, to issue paper money. Yeah, we're talking about paper money. Yeah, not only RM1, but probably RM5, RM10, and so on. Okay, so there is a supply of money. But for consumer perspective or society perspective, yeah, the demand for money, they are needed some money because of three motives. Yeah. All right. The first one is transaction motive, yeah, whereby, yeah, they can use money for buying and selling. Okay, for any goods and services, goods and services. But precautionary motive means that they use money if any emergency happens. Yeah, if something happen in your future, you have no option, but you are forced to spend. For example, yeah, if you got flat tired, yeah, you have no choice but to spend money to replace the new tire. Or if you are sick, yeah, you have no option, but you have to go to hospital, yeah, and pay some medical expenses. Yeah, emergency. Even ransom also considered as emergency money. Ransom means that, let's say if someone has been kidnapped, yeah, and then they ask for ransom money, yes, you're forced to pay it to the abductor. Okay, and then speculative motive, yeah, where sometimes that you can make money from money. Okay, so that means you can play money for the future, for example savings, forex, and so on. Okay, so we're talking about the speculative money, that the money value can be increased or money value can be decreased, and taking advantages in the future. Okay, money supply consists of 3 M's. Yeah, let's have a look at M1, M2, and M3. Okay, so M1, which is money supply first class, yeah, consisting of coins, yeah, currency notes, and demand deposit, which is bank money or checks. Okay, but for M2, which is consists of total M1 that have you been calculated, plus with fixed and saving deposit in commercial banks, negotiable certificate of deposit, and bank negara certificate, is a second class of money. And the last one, M3, that means M2 plus saving and fixed deposit in other banking institution. That means only other bank, that means non-bank. Okay, for example, EPF, yeah, MI, development banks, yeah, and then insurance company, and so on. So we're talking about the difference between 3 layers of money supply. Definitely M1 is the most powerful money, yeah, that every country can have. Yeah, the other M3 is like just others money only. Okay, right, skip this one. Okay, let's skip to this one. What happened to the money the interest, yeah, if the money demand is shifting to the left and shifting to the right. Okay, these are the example of money demand shift to the left. Okay, this is because, why? It is because less demand. Yeah, that means people doesn't want to spend much money. Yeah, okay. There is a less demand. Yeah, there is a one time whereby people doesn't want to really spend the money, and then they don't need money much, so that's why they're shifting to the right. Okay, originally, okay, so these are the interest rate. Okay, but somehow, if money demand is shifted to the left, that means, this is an EO, equilibrium, and therefore, this will be E1. So that means, the interest rate will be low. Interest rate will be low. Okay, it is one of the factors. It is because people doesn't want to spend money. That is one thing. And then the second one, people feel that the interest rate is too high. They don't want to take a loan, and then they don't want to pay high interest. So that's why, if there is a less demand, it is forced by the market to reduce the interest rate. Thus, it allows consumer to use the money back. We're talking about interest rate. That means it is related to inflation. Okay, so that is a shift to the left. Okay, let's have a look at what happens if money supply shift to the left. Okay, money supply shift to the left from MS1 to MS2 because of central bank issues very less money, very less paper. They don't produce much money paper, especially M1. The circulation of M is quite low. So therefore, from the original interest rate, and then who is there, IR1 and IR2. So if money supply shift to the left, interest rate will be increased. Okay. Because of we're talking about so that's why, as you can see, the policy of government of coming out with the supply more money, just because they want to encourage people to have some spending. And then thus it will encourage consumption, as we are learned during the GDP methods. Okay, let's have a look at this CPI. Okay, what is CPI is all about? Okay, CPI is a measure of change of average price of goods and services. How many goods, how many services? Only God knows, because there are a lot of goods and services in the country. we're talking about average price, that means average in index. Okay, so this is the index for the purpose of to measure how well the price, is it the price going up or going down. Yeah, and that's why consumer price index will lead to the inflation. Yeah, the more people spend, the more demand is there, that means the price will be going up. Okay, the less people spend, the less demand is there, the inflation will be going down. So let's have a look at this example. Okay, usually index what we call as not the shilling, that means the merit one, the benchmark is 100. If there is more than 100, that means price will be going up usually. Okay, for example, this one 160, that means quite 160%. Yeah, 140, this is quite low. 80. That means price is going down a little bit. And then 112.5, that means more than 100, there is a possibility that transportation will be going up as well. So if you plus those four and then average it, and then the general price for the general price index, CPI index for the country is 123.1, that means the inflation rate is somehow about 23.11%. For the whole product and also services. Okay, step one, selection of the base year, and then this one the current year. Okay, let's say this one is 2021 and base year is usually 2020 from the last year. CPI basket means that there is an item as a listed. Okay, simple CPI. Okay, but that one is a simple CPI, but this one if by using weighted price index. Okay, weighted price index, weighted means that is a quite priority. Okay, high score mean high priority, low score mean low priority. So that means if the index is quite high and then the weight is quite high, therefore the index will also quite high as well. Okay, let's say 160 multiplied by 4, 640, 140 multiplied by 3, 420, and so on. So the total of this one divided by the total weight, and then you get this one 136.5. That means there is a possibility of inflation is around the price is going up by 36.5% for the whole goods and services. Okay, of course the best thing is we want to expect that the CPI will be low, and also the CPI which below than 100, that might be quite a benefit for the consumer. Weighted CPI. Okay, what is the uses of CPI? The first one, I already told that to calculate inflation rate. Okay, so if the inflation rate is high, there is a possibility of the price is going high as well. So these are the formulas: CPI current year minus previous year divided by previous year multiplied by 100. Let's say if this one 2021, that means 2020 and 2022. And then to calculate changes in the value of money, because remember, money value can be deferred time by time. Okay, base year index minus 1 divided by CPI multiplied by 100. To identify the distribution of income, because we want to see the gap between the richer and the poorer. And the last one, to use as a basis of future contract. Okay, because the price is an indicator to make analysis for the future prices. Let's skip this one. Okay, let's have a look at banking system. Okay, banking system have three groups. The first one, banking institution. Okay, whereby it consists of banks. The second one, non-banking financial institution. That means it is other than banking institution. And the last one, non-bank intermediaries. Okay, so banking institution is usually consists of commercial bank and central bank itself. Okay, for example, in Malaysia, we have CIMB, we have RHB, and so on. Maybank, and so on. Okay, but for central bank, of course, yeah, Bank Negara Malaysia or Central Bank of Malaysia. In other countries, we have Central Bank of America, Central Bank of UK, yeah, and so on. All right. The second class is non-banking financial institution, which is apart from banking institution, that consists of Islamic bank. Okay, that means any banking institution that operate with Islamic way. And then finance companies is more on credit companies. Yeah, that means they provide financing. Yeah, or every types of financing. Merchant bank, we're talking about investment. Okay, banks that operate to assist investment. And the last one, discount houses. Yeah, it is for what we call as a short-term money market. Okay, and the last one, the final class is non-financial intermediaries, which is apart from banking institution and non-banking. The first one, development financial institution. That means the institution that can assist for the selected economy, yeah, for the development. For example, Agrobank in Malaysia. Okay, previously we call as Bank Pertanian, and then SME Bank, and then we MIDF, and so on. And the second one is Employee Provident Fund. This one is for pension for the future. Okay, in Malaysia, we call as KWSP. In other country, we call as a EPF. Okay, commercial bank, I already told that institution that owned by private sector and the profit-making institution. So the word profit-making is basically referred to commercial. That means bank is used for business. Okay, so the function is usually accepting deposit. Yeah, you save the money into bank. Yeah, and then they will accept your deposit and then treat it as your saving account or current account and so on. Providing loans and advances. Yeah, this is whereby they are offering you card credit services. Yeah, hire purchase, which is car loan, housing loan. Yeah, and any other overdraft facilities and so on. And providing other banking service and facilities, for example, internet banking, phone banking, yeah, CDM, cash deposit machine, and many more. Yeah. In fact, yeah, nowadays they can also offer to for you to save ASB into a certain bank, unit trust. Yeah, and also you can pay some bills, yeah, in the banks as well. Utilities we're talking about. Okay, credit creation. What does credit creation stands for? A process where a small given deposit in the commercial bank will lead to an increase the supply of money. Okay. All right. Why are we talking about credit creation? Okay, let's say this is bank. Okay, and then this is people. All right. Let me tell you the true story. Yeah. Usually, bank does not have money. Yeah. Uh, they have not much money actually, but they are depending on the people's deposit. Okay, if people deposit more money, yeah, the bank asset will be increase. But if people withdraw money, yeah, if people withdraw money, yeah, and then yeah, the bank asset will be decrease. Yeah, okay. So this is depositor. Okay, and then there is a one party, we call it as a borrower. Okay, so you see, why borrowers need money? Okay, because they want to apply loan from bank. Okay, for example, to loan a car loan, yeah, to buy a car, credit card, and then housing loan. So what bank do is they use depositors' money, and then the money that deposit get from depositors will be lent to the borrower, and then borrower will pay back, yeah, plus interest. So therefore, yeah, if you're asking me how banks make money, it is by loans. Yeah, by loans, yeah, they're providing loans and then they charge interest to the borrower. Yeah, so that is their return on investment. So credit creations told you that the people's deposit will make a bank wants to lend money to the borrower. That is a simple term of credit creation that I'm talking about. Okay. Okay, so these are the some assumption. Okay, quite a lot. I mean, yeah. We're talking about loans here. Yeah. Loans, yeah, that usually is a main bank's business. Yeah. Okay, and then these are the deposits. Yeah. Okay. Liability. Why in the balance sheet deposit as a liability? Because bank owes depositors. Yeah. Okay. And then yeah, why loans under asset? It is because yeah, loans consist of borrowers. Yeah. Okay, borrowers. And then they tie up with borrowers, and then borrowers need to pay the loans, yeah, with interest. Okay, same thing as well. A bank will loan to another person. This is the process that I'm talking about, but this one is more on showing on the figures, yeah. Okay, the process will continue until total money supply is 10,000. Let's say there's an example. Okay, so these are the important formula, but this one is for your extra reading. Okay. Limitation to credit creation. One of them I can say that is depend on the depositor. If depositor have no interest to save into a particular bank, the money into particular bank, therefore the asset will become decreased. Hence that banks does not have option rather than they borrow money from somewhere else. That is the problem. So, but if depositors save a lot of money into a particular bank, that particular bank can operate the business as usual, which is giving loans to the borrower. So I can say that. Okay, central bank, yeah, we already highlighted that it is an important financial institution of every country and plays active role in implementing government's economic policy. In other words, central bank also known as head of banks, okay, or head of financial institution, because all financial institution, when we go back to this structure, this one. Okay, all banking system, yeah, either banking institution, non-banking institution, and non-financial intermediaries is headed or lead by bank, so Central Bank of Malaysia. At the context of Malaysia, yeah, different country have different central bank, yeah, but usually central bank more focusing on banking institution, but let's pay attention on non-banking financial institution and non-financial intermediaries. Okay, let's have a look at the function of central bank in this Malaysia context. That means Central Bank of Malaysia or Bank Negara Malaysia. The first one, to issue currency. This is the main one, which is we talking about M1 earlier, money supply. Yeah, because they are the ones who issued paper money and safeguard the external value of currency. Okay, so if you see, Malaysia has suffered financial crisis on 1997. Yeah, was because of currency problem. Yeah, the ringgit Malaysia, sorry, the some trader, one trader that trade ringgit Malaysia quite a lot. Yeah, that's why ringgit Malaysia value become massively drop, because the one of the American trader, which is George Soros, yeah, purchase ringgit Malaysia, and then they take away Malaysia ringgit, yeah, and goes to their country. So that's why there is a massive drop of ringgit Malaysia, because there is no control of currency. Okay. So again, going back to one of the main function of central bank is to ensure that they can issue currency, which is paper fiat money, M1, and then they need to take care about the currency value of the country. Okay, the second one, banker to the government. Okay, because central bank is under Ministry of Finance. Yeah, so they are also an advisor, to government, regarding the banking transactions and so on. Banker to the other banks, again we're talking about central bank as a head of financial institution. Okay, so let's say if a bank have a problem or issue, yes, central bank is like become a father, and then they try to help, and salvage the damage has been done by the particular bank. Promoting monetary stability, we're talking about money supply and money demand, yeah, to make it equilibrium and balance between money demand and money supply. Okay, we're talking about some of the policies. And the last one, holder of the country's stock and gold and foreign currency reserve. We're talking about reserves here. Okay, central bank is one of the authorities that can save. Yeah, I mean, we're talking about reserve, the gold value and foreign currency value. It is only under central bank's power. Yeah. So we're talking about central banks is more on spearheading financial institution. Okay, they need to have a strong system. Otherwise, if not, yeah, there will be national economy will become quite in hectic. Yeah. Okay. Alright, so that's all for chapter 6, which is money and banking. Okay, so thank you so much for listening. Okay, and then if any question, yeah, please leave the chat, yeah, leave the comments into the chat box. Yeah, and then yeah, we'll see you again on the final chapter, yeah, which is international trade. Okay, until then, see you again and goodbye.